Hey traders, welcome to Charts and Coffee. Great to see everybody. All right, happy Wednesday. Happy Powell Wednesday. We have a lot going on today in terms of day one of Powell testimony. And also, we've got the ADP non-farm payroll. So this starts that countdown to Friday's non-farm payroll. I can't think of a more timely macroeconomic week in terms of hearing from, well, the head of the central bank, right? Think about the other voting members. Yes, they have a vote, but really the only person who speaks on behalf of the Federal Reserve, truly on behalf of the Federal Reserve, is the Fed chair. So even though we have Bullard right at the bell, I mean, I don't know that the market needs a dose of Bullard, but here it comes anyways. But at 10 a.m., here comes Powell. Now, what does that mean to us, right? Well, yesterday, during the State of the Union, I was watching really the Fed funds rate and the indices. I know a lot of you are probably doing a little Asian session trading, 9 p.m. You've got Sydney, Auckland, Sydney, Tokyo, Hong Kong, Singapore, the volume, the volatility for the Asian sessions well underway. And I was looking to see how the target rate probabilities were going to react. Now, yesterday, and I mentioned this a couple of times, and hopefully you all caught that in the rooms or in the Charts and Coffee or the weekly sector and macroeconomic notes that I send out to the members. One of the things I've been saying is block the noise out and focus on the Fed. Focus on the Fed. That's going to keep you out of trouble. Yesterday, there was a lot of talk, and it was really completely unjustified. Other than the corner of the market that is the 10-year bond, when you looked at the target rate probabilities, they were still 90+% expecting a quarter point hike. So the only place that the hold or the no hike conversation was happening was on, as my mom has called it my entire life, the dumb box. Does everyone know what the dumb box is? It's the television. A lot of conversations about the market are only happening on television, not in flow, not in trades. They're only happening on TV, which is why I don't listen to it, right? Make sure you mute that thing. As my mom said, it is the dumb box. So now, this morning, after State of the Union and after Powell's comments, now we know that those comments were released 90 minutes, or actually released 90 minutes earlier. So his prepared statement has already hit the airwaves. And I wanted to wait to refresh this page with you all. Take a look now. I know it's not necessarily a significant change, but gone is that ridiculous hold 0.25 column, which I think peaked at maybe 3%. Back is the half point hike column, which is still pretty insignificant at under 10%. We are still looking at a quarter point hike. So please, the chatter that happens, take a look at the data and see, is this really happening anywhere but on the dumb box? All right. So with that being said, we know what's coming up this week. And as always, this show is about your questions. So let's go ahead and jump on into them. And by the way, if any of this in terms of current trading environment, what are we doing to navigate this time, this environment? And what can you do going into March? I know I've mentioned it. I want to make sure nobody misses this. March 9, 8 p.m., pencil it in. Well, heck, you can use pen now. It's happening. It's going down on the 9th at 8, simplertrading.com/timeless. We are going to talk about the trades that I've been making this year. We're going to talk about how to come back from losing trades. I mentioned 4 losers in a row to kick off the year. Not the mental framework that you always want when you're turning the page on a fresh month, fresh year, but we can come back from that. And if you can come back from that in the beginning of the year, I think you can come back from that any time of year, because you're going to deal with this cycle sometimes of a string of losers, right? What do you do and what tools did I use to come back from? By the way, no new tools, gang. This is not going to be a tool conversation. You have the tools. Head on over to countdowntrader.com. Now you're a week out, so make sure you grab Darvis 2.0, grab and wave and the propulsion free over there. So you have the layout that we are going to be talking about. This is not going to be a new secret squiggle. How are we navigating this market? How have I, since I get giddy and I've had too much coffee today, how have I had an 80+% win rate since the 26th of January? I think we had 3 losers in that span of time after going 0 for 4 at the plate at the beginning of the year. We're going to talk about all that. I'm very, very excited. So first question that we have coming up, EWZ. I love the question. Tom, it's a cool question because EWZ is Brazil. Brazil is when we talk about commodity currencies, and we talk about countries whose economy, like New Zealand, like Australia, these calm dolls, like Canada, where there is a strong influence of commodity exports. And of course, Brazil, and it's what's known as softs, right? Cocoa and sugar, things like that. If you take a look at cocoa and sugar, they're moving up. You take a look at the EWZ, it's moving up as well. This is a proxy for commodity plays. And this is really exciting. Your timing is great, Tom. The way in which we've taken out that 200 propulsion is incredible. You see that right there? Those are those white dots, that white line. Getting above that, that's the bullish hemisphere. Buy the dips. I like that a lot. So look to buy the dips a la what happened on February 2-4. And I think you're right as rain, especially with, I think, the battle being fought and won to get EWZ back above that 200. Very important level. All right, next up. Hey there, Julian. Can I please explain what are breaches, their types and points of control? So a breach is, I use breach kind of in a very generic English language way. We see a whale breaching the surface of the water, right? I'm just describing, I hopefully visually, what happens when price is able to break the surface. Breaches can be oftentimes, obviously, it's breaking resistance, but breaches can be breaking support as well. And breach is a terminology that I use for my day trading, right? Something we do in the futures room, something we do in the sector secrets mastery as well. I love those zero dated Monday, Wednesday, Friday options. That's something that we like to do in the mastery. And of course, I love the ES futures, the micro futures, even options on the futures, something we can do in the futures room. So breach is definitely an intraday day trading approach. In terms of types, there's a breach to the upside and a breach to the downside, but points of control are a very different conversation. Point of control is less about price and time, which is what a breach is. Points of control are a volume level. In other words, a point of control, for those of you that may not be familiar with this volume profile technobabble, right, this jargon, and I love points of control, Julian. It's the price level with the single most amount of volume added. That's important. So thanks for the question, Julian. Michael, XLF. Oh gosh, Michael, I would love to say we have a clean trend on XLF. One would think with at least 2 to 3 rate hikes between now and July, I would say 3 easily. March hike, quarter point, May hike, quarter point, June hike, quarter point. I would love to say we have a great trend on XLF. We don't. We have better trends on things like American Express, which I am looking at. Big candle, I know, but it's on the radar. XLF has reached an oversold zone. You can see here from a conversation with members that I had yesterday. This is where that Darvis gang that I've been telling you all to put on your charts, regardless of how you're trading now, Darvis is not going to supplant anything you have. It will only supplement it. It will only add to your analysis. And take a look at how it identified the zone here perfectly. This is oversold. I'd like to see an inside day or a minor low. This could be a really nice bounce. What else would I like to see? I'd like to see a slow stochastic or a ready aim fire for those of you that have it, down near 20. Right now, the slow stochastic reading is about 22, 23. So it's flirting with that oversold buy level in a neutral yellow. You see that? A neutral yellow environment. That's a fade buy, my friend. So that's XLF. Keep an eye on some of the relative outperformers within XLF as well. The ones that we've been talking about most consistently are Chubb, Wells was in the conversation for a bit, and I'd have to say American Express is near the top of the list. I want that nice squat-bodied minor low or inside candle. Show that pause, show that the market is tapping the brakes, and then we'll go ahead and play that exhaustion buy. I'm very bullish financials, but I don't have the price action yet. I don't have the setup yet to say these are trend following trades, which is really my jam. But I think we've got buys there for sure, Michael. All right, moving on. Hey there, Jason. How do you determine trend direction when the daily shows bullish, but all the smaller charts show bearish using your indicator? So, Jason, great question. Easy answer, probably a little bit of a heretic answer. I don't give a rip what the smaller time frames are doing. I really don't. I know a lot of folks use multiple time frame. I can't even say it anymore. Multiple time frame confirmation. If Jason, you and I were having this conversation 20, gosh, maybe even 15 years ago, clearly 30 years ago, I was doing this because we were told to do it. Look at the 5, look at the 15, look at the 30, 60, 120, 240, 480 daily, weekly, heck, even monthly. Which one of those do we trade? That's the first problem. And I find that to be very difficult. So not only are we supposed to find the symbol, now we're supposed to find which one of a myriad of time frames has the best setup. I got frustrated with that. I actually got sick of it. So what I said to myself is, Rog, either you're day trading and you have a 2 or 5 minute time frame on your chart, or you have a daily. And when you move over to your longer term book of trades, or really my investments or position trades, it's a weekly. We are going to start adding my weekly book, quarterly discussions in the Sector Secrets Mastery. I have so much to share with you all on the 9th. I'm about to explode, but I'll definitely be giving you little tastes of it between now and then, because I really want you all to make a good informed decision as to whether, frankly, I'm your mentor going forward. Don't want to waste your time or your money, right? So we're going to add that longer term weekly book of position trades or investments conversation. Not something you need to revisit every month even. It's about every quarter. But having said that, those are the only time frames that I consider. So if a 30-minute is agreeing with the 60, or if the 60 is agreeing with the daily, I don't do that anymore. So to answer your question, how do you determine if the trend direction when the daily shows bullish, but other small time frames are showing bearish? I'm not looking at them. Think of it this way. And here, maybe this is something, and again, just don't jump in and say, okay, I'm getting rid of all the intraday time frames. I'm going to tell you what I do and then see if it works for you. Think of it this way. If someone is going to look at how the market ended a day, ended a session, if someone says it was a bullish day or a bearish day, is it because we were up at noon? Is it because we were down at 2 p.m.? Is it because we were down on the open? Or is it because at the end of that session, 4 p.m., Wall Street cash close, we were up or down? We have the broadest measuring stick of bullish and bearishness, not happening on a 5-minute, not happening on a 1 hour, not happening on a weekly or monthly, on a daily. We measure strength. We, meaning the investing and trading public, we measure strength on a daily time frame. So to me, that's the most psychologically relevant. It may not always be the best time frame to trade. Sometimes I'll be better off day trading, shorter term time frames, being nimble. But the most psychologically relevant one, if there's a time frame that is a barometer of psychology, and by the way, that is what we do. We trade psychology. We're not trading the S&P. We're trading the psychology of the S&P, right? That's the best measurement. And that's why I no longer look at multiple time frames. If you go back and look at my work, and it's all over the internet, sometimes I cringe, but it's the evolution of a trader. In 3 decades, you will see, when you go back to things that were probably posted in the late 90s, early 2000s, I was looking at multiple time frames. And the more that I taught, and the more that I found that my members and my traders were struggling with, Rog, I set that up on the 30. I guess I should have done the 2 hour or whatever. I realized this was a pain point and we needed to remove that. So either daily swings or short-term day trading. And that has made my day trading more effective, and it's made my swing trading far more clear. So I hope that helps. I know I kind of deep dove that topic, but really important. Let's see. Jamie says, been shorting bonds. Love it, Jamie. Now, I know that The bond trade has been really great for shorts. But what happened recently? Yesterday's move, and short of just calling, beep on the move, just a very unladylike word on the move. Um, I said it to myself. This move was just absolute bunk, right? I don't know what it is that bond traders were smoking yesterday, but or drinking or whatever. I mean, they were out of their minds. The biggest problem that the Federal Reserve has is not the Ukraine. Ukraine is a terrible situation happening, but it has nothing really to do with the biggest problem that the Federal Reserve had, which, by the way, if you did not check out my free video from last night, I put it out there. Inflation. And why would we say that? Look at corn. Look at beans. Two markets that we've been long in the futures room for months, if not weeks, right? That's not a Ukraine trade. That is an inflation trade. Same thing with crude oil. That's not a Ukraine trade. That's an inflation trade. Powell basically reminded us this morning with those prepared statements, get out of that Ukraine trading fog. This is what we are watching. It is absolutely inflation. I think we saw that reiterated in the State of the Union yesterday, right? So if that's the message, take a look at bonds today. I think that trade just went way too far. Same thing goes with ZB. So I'm disappointed that it launched up into the stratosphere, but at the same time, now remember, and if you've got these tools on your chart, you saw it. I don't have to tell you, and that makes me so happy. Take a look at the Darvis there. Take a look at the Darvis right there. Okay, so let's clean this chart up just a bit. Look at those two Darvis levels. That is your zone. So the bottom line is, if the trend that precedes chop was down, don't flip your directional bias. This is not a Momo environment unless you just want to day trade it, right? Day trading bonds, the upside, brilliant, perfect, awesome. When you step out to the daily, what does the daily tell you? Focus on the shorts, right? Focus on that overbought peak. And remember that bond traders just bonked their heads yesterday. So I don't think the narrative changed in a significant way one bit. I think we've just gotten too into the news cycle, which is just bombarding us. This is why I say, turn the dumb box off. It's bombarding us with Ukraine as if that's what's moving the market. Realize that I can think of only a couple markets that have really moved because of Ukraine. Wheat and uranium, not crude, not corn, not beans. Those were already moving higher. And I think the overall trend in the equities market, this is no more a significant bounce. This idea that Ukraine means the Fed won't hike rates, which is ridiculous. No more than what we saw back at the end of January to early part of February. So we want to keep the bigger trend in context. And this is really important because it's sort of one of my pet peeves. Macro is not macroeconomics. A lot of folks like to throw the word macro around. I don't know. Maybe it makes them feel smart. Macro is just like a macro lens on a camera. It's a big picture, 40,000 foot view. It can be helpful, but it's also very subjective, headline driven, right? Macroeconomics, which is the only macro I will ever talk about. I won't waste your time with the former. The latter, macroeconomics, is the rate of change trend, right? Of growth, inflation, money supply, monetary policy, asset purchases, right? All these Federal Reserve things, the balance sheet, right? But it's the larger forces of an economy, growth, inflation, jobs, and then all those kind of sub factors that surround what a central bank is doing. When you understand that, all the noise of macro, right? News, headlines, you'll be able to phase that out, because if it is truly going to move the markets for a longer period of time than just a Momo, it'll affect the macroeconomics, right? So that's the easiest way to keep sanity in times like this, which is exactly what we've done since the end of January, right? We were already getting long oil and oil stocks. I didn't know about the Ukraine. I wish it never happened, right? I mean, we all do, but we were already on trends that had nothing to do with news and headlines, right? And Lauren is telling me, oh man, Salty Raghee's on deck. Yeah, Salty Raghee, my alter ego. This is the girl. The Salty Raghee is the one that wants to make sure that you all are able to put the best trades forth, right? And sometimes Salty Raghee gets gets loose. All right, so I think that's a really important way to look at this. Now, Home Depot, I like Home Depot for a short. I like ITB and XHB for shorts. I'm still bearish this market, gang. Rate hikes are coming. Equities aren't going to like it. The downtrend in most of the sectors is intact. Follow the trends. If you're not sure how to do this, definitely join me on Wednesday, next Wednesday, 8 p.m. And just like that, our show is over. However, we are going to start having a Sunday show. When the market's open, 6 p.m., we're going to have a Sunday night live show. So I'll see you all for that for sure. I'll see you tomorrow, same time, same station. Be good to each other, gang.